And welcome to my more important analysis videos on Monday 11th of December with me, Richard Perry, market analyst at Hantec Markets. These markets are fairly sort of consolidating to a little bit of dollar weakness today, a little bit of positivity coming through the equity markets there. We had a decent close on Wall Street on Friday, which helped to sort of maintain a bit of stability through these markets. We saw a bit of a rebound on Thursday and Friday on Wall Street, and that has certainly helped to stabilise market sentiment, and looking to push higher on the DAX and the FTSE 100 today. FTSE is outperforming as sterling is underperforming. That continues to remain a theme there through these forex markets and equity markets, in that there's a negative correlation between FTSE and sterling. And the underperformance of of sterling is coming on the back of questions being asked as to how sustainable Theresa May's position is in terms of this Brexit negotiation that she struck, the deal that she struck on Friday morning. Yeah, I mean, sterling has dropped back, nothing too decisive yet, but it's under a little bit of pressure today and is underperforming these markets. Euro sterling is my chart of the day, by the way. But there's also a degree of dollar underperformance as well, as the trade-weighted dollar has just rolled over a touch. That's coming with the euro, which is slightly higher, about 30 pips. And that's coming with bond yields, which treasury yields in the States, which have just dropped back a touch on the 2-year and the 10-year. And subsequently we have seen a little bit of a dip back on the dollar again. That all comes ahead of the Fed meeting this week, which is likely to be a key mover of the dollar in the days to come. So other than that, we're fairly settled, but there is a Kiwi dollar outperformance, and that Kiwi dollar outperformance is coming with the announcement of a new governor of the RBNZ, Adrian Orr, who has a history of being on the board of governors on the RBNZ, but also has industry experience as well, and seen as a fairly sort of steady hand in terms of inflation targeting, and yeah, that's helped to sustain a bit of a rally on the Kiwi today. So interesting move there. But in terms of what we've got to look forward to today, pretty much just the JOLTS really. JOLTS jobs openings for the States this afternoon, and that's basically the only real bit of data. Had been actually expected to drop back, but it now looks like it's 6.09 the expectation there. So still very strong on the JOLTS. Now my chart today is Euro Sterling. Now what we saw on Euro Sterling on Friday was a downside break on the initial reaction to Theresa May's deal. The market has unwound quite strongly since then. Is that a false downside break? But this is a big support. 87.40, a big support, which has been holding for 6 months or so. Broke to the downside in the last, well, certainly on Friday morning, but bounced quite strongly there. You could sort of look at this chart and think, well, is this set up for a downside break? Well, you sort of look at the momentum indicators on the RSI, which is failing at 60 and going towards the low 30s, so a slight bear bias there, nothing too significant, and it didn't interestingly, it also didn't sort of move below that reaction low that we saw in early November on the RSI. MACD lines crossing, sort of failing around neutral, but again starting to tick higher, as are the stochastics. So maybe this isn't the sort of the downside break that we're looking for. Maybe it is a bit of a false move initially, but I think this resistance of this pivot, got the crosshair around 88.50. This sort of pivot line that we've seen in recent couple of months, certainly in late November provided support, and then early December it's been resistance. It'll be interesting to see if the market can break through that. A sort of closing break above that would certainly improve the outlook, but you'd say trading underneath all the moving averages now, which are also turning down, then this could still just be another little rally that gets sold into. So here we see on the hourly chart, the configuration of the momentum is slightly better, but nothing yet sustainable. If you saw the RSI on the hourly above 70, then you'd start to think, well, maybe we are going to get an upside break. But for now, this still looks to be a bit of a rally that gets sold into, possibly, and that could still be the case. So it'll be one to watch, certainly, if you start to see the market rolling over around this 88.50 level The earlier high just earlier on this hour at 88.38. So are we seeing a bit of a sort of a rolling over there? It'll be interesting to see, but certainly a failure underneath 88.50 would start to see the market rolling back probably towards 87.50, and that's likely to come with sort of expectation of decent traction. Which I mean, if the market is seriously contemplating the fact that this deal may unravel, then you're likely to see sterling quite sharply lower. You haven't yet seen it today. Little bit of an underperformance, but nothing too decisive. Yeah, interesting that the market has sort of failed a touch at that 88.50 level. So I wish you good luck in your trading today, and I will speak to you later. Thank you.